Welcome traders to another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 using the E-mini futures contract and put together a action plan for the trading week ahead, looking at some high probability action areas and some price targets for this final full trading week of 2025. A little bit of housekeeping. First of all, I will be offline from the 18th of December, actually the 17th of December, the London close, and I'll be back online Tuesday, January the 6th from the London Open. So there won't be any updates in that interim holiday period. So with respect to the market dynamics and narratives and internals, we'll cover those first of all. We'll then jump into the charts and look at the technical picture for the week ahead. So S&P 500 closed down 0.6% for the week last week. That mostly came via Friday's sell-off, that 1.1% decline. Information technology was a clear laggard last week with NVIDIA leading that sector down 2%. Financials and materials led the advancing sectors, gaining 2.4% on the week. And financials and industrials also managed to print new all-time highs on a sector basis. The S&P 500 did manage a new closing high during the week at 69.01 and came within 20 points of a new all-time intraday high. Rotation out of mega cap tech growth and into other sectors continued throughout last week. The equal weight S&P 500 actually closed up 0.3% for the week and also managed to print a new all-time highs. In terms of the sector rotation, that continues, as I say, and we're not really seeing any meaningful disruption. Utilities and real estate remain the laggards on a sectoral basis. We are seeing obviously a little bit of weakness creeping into information technology as highlighted, but we're still modestly in positive territory there across the short to medium term outlook. So we're anticipating that really to get a meaningful pullback, we're going to want to see more leakage from the information tech sector, which has been leading the charge this year. In terms of the data calendar heading into the week ahead, it's quiet today, but Tuesday, Thursday, and Friday, we can expect some volatility. I'll also highlight that we are in options expiration, quarter witching on Friday, and VIX expiration notably on Wednesday. So we can anticipate some additional volatility around those events. And like I say, in terms of data, tomorrow we get non-farm payrolls for November, previous 119K. And markets will be paying close attention to this print as Powell last week in the FOMC minutes leaned on the employment outlook as being a key factor in terms of where the rate path going forward. We still have the ongoing dynamic of the new Fed chair coming into play, and Trump, after stating that Hassett was looking like a shoo-in, has once again flip-flopped, and we now have Kevin Warsh in the picture. Both of these candidates are likely to support the Trump strategy for rates, and he has even suggested over the weekend that he should be counselled on the rate environment and rate path going forward. Whether or not that actually comes to pass, we shall see. But that's just another dynamic to consider as this ongoing debate with respect to the new Fed chair rumbles on into the new year. And as I say, with respect to payrolls tomorrow, any weakness there will likely see rate bets amped up, reductions amped up into the new year, and should be supportive on that. Bad news being perceived as good news by the markets heading into that print. So we'll see what we get from there. We're also going to get retail sales for October. Again, data is slightly stale given the government shutdown. And we will get manufacturing PMIs and services PMIs for December, so a little bit more pertinent to the current market action. So keep an eye on those. So pretty data intensive morning tomorrow, and then heading into Wednesday. Like I say, VIX expiration, so some potential for some volatility. Keep an eye on the 18 level in terms of the VIX. As we continue to trade below there, we likely see additional supply, certainly into expiration, and then we'll get the new front month contract coming into play, and a new level to focus on heading into Thursday, Friday. And then Thursday, we get CPI for November, core CPI month over month and year over year, still focused on that 3% level with the month over month 0.3%. We also get initial jobless claims last time out, negative 236. So keep an eye on those as well as an additional input to the jobs data, which is firmly in Powell's remit at the moment with respect to rates. We'll also get Philadelphia Fed manufacturing for December. And then heading into Thursday evening, we get the BOJ interest rate decision. Looking there, or the market's certainly pricing in the potential for a hike. I'll talk more about that shortly. And then into Friday, we get the PCE data, rounding out the week there. Month over month, 0.2% last time out. PCE price index year over year, 2.8%. And last but not least, existing home sales. So data deluge heading into the back end of the week. We also get interest rate decisions from the ECB and the Bank of England. Those, whilst could play into near-term volatility, are likely to really weigh on the US equity picture too heavily. Keep an eye on the ECB for a slightly more hawkish tilt there, which could impact the dollar in the near term. So that's where we are with respect to the dynamics and the data that we're keeping an eye on this week. And so the next thing we really want to think about is where we are in terms of our internals. So in terms of stocks trading over their 20-day moving average, last week was 62%. Current is 67%, so an uptick there. Trading over the 50-day moving average, previous 54%, an uptick again, 58% now. And over the 200-day moving average, up from the 60% prior to 62%. So the rotation out of high-flying tech and into other sectors continues apace. Hard to move significantly lower unless we start to see all sectors participating to the downside. So what we're looking at, or what I'm viewing at the moment, is we're likely to see more of a correction in terms of time, consolidation versus price at this point. In terms of realized volatility, looking for that to come down. We're into last look was 14.3%. We're now down at 12.3%. Which was that was accomplished in only a couple of days, Wednesday and Friday. And this week, the 20-day average return, plus or minus, in terms of realized volatility, 0.61%. And we're anticipating that to drop into the 10% area this week. And so in terms of the gamma profile, as we head into the week, gamma in terms of options, we're in a zero gamma environment below 68.20. This is still quoting the front month of the current continuous contract. If you're trading the March contract at the moment, you want to add about 60 points to that to give you the equivalent level in the March contract. I won't be quoting March until after the close in New York tomorrow, when the continuous contract rolls into March. In terms of the max pain for the week, it really remains to be seen. If we hold the 68.20, then we're going to be looking for a move in terms of the core wall in play at the moment on the upside, 68.95 to 69.15. To the downside, if we start to break meaningfully lower, watch 67.15 as the lower max pain limit in terms of gamma exposure. So those levels you want to factor into to your charts heading into this week. So let's move to the technical picture and start to think about where we are in terms of action areas and how the markets are set up technically as we roll into the sessions ahead. So we have a weekly bullish bullish pin bar continuation. That was on the monthly chart. Still remains in play, and we are seeing consolidation in the upper end of that pin bar continuation pattern that we put in for November. So whilst we hold that pattern, then focus remains to the upside. We have that 127 extension of the pullback through the tariff tantrum, which leaves us with a 72.44 upside objective on the monthly time frame. Flipping that to the weekly, and let's see where we are. The weekly remains in bullish momentum structure versus the 5-period volume weighted average price. And so again, on the weekly time frame, focus does remain at this juncture to the upside, and not really seeing any cracks in terms of that bullish momentum until we start to see prices trade below the 6760s in terms of weekly momentum. So we maintain an upside bias on the weekly time frame. Moving to the daily time frame, obviously given Friday's close, we actually saw the 5-period volume weighted average price flip bearish, and we're trying to recover. The key level being the 68.66 level, which is the VWAP on the 5-period look back for the front month contract. So if we start to get some traction above there, then that will mean that if we close above there today, that we will neutralize the signal from Friday, and focus returns to the upside. As per the daily setup, we are still looking at our 5=1 objective up into that 72.13 versus the 65.25. So that's the minimum upside target there on the wave structure, with our 5=1 objective. So that's what we're looking for in terms of the daily pattern. And again, on the daily time frame, we have the volume point of control for the daily profile sitting just above 6,700. So again, in terms of any pullbacks we may see or near-term volatility as we head into the back end of this week, then that 6,700 level is going to be key. If that's defended, then focus remains firmly on this upside objective. Not suggesting that we're going to see that by the end of by year end or anything of that nature, but that's the technical target for the upside extension, whilst we hold that 65.25 as our potential wave for low. So that said, let's move into the near-term setup where I see opportunity for the week ahead. So as per the update issued this morning, 6800 to 6810 is going to be my weekly bull bear zone. We traded into the target area, the 2 sigma support zone from Friday's update, which was defended and initiated long positions from that area. So holding those into the open here, and we will see if we can maintain an upside gap here. We closed on Friday at 68.30, so we are gapping higher at this point. So we'll see how we trade into the open. The initial resistance comes in at the 68.70, 68.80 area. If we can, if bears come in here with decent supply heading into the open, I'd anticipate we look for at least a half gap fill, which would currently come in around the 68.50s. If we can hold there, then focus is going to be on further upside to target into daily projected range resistance, 68.90s to the 69.02, 69.02 being the 78.6% retracement of the sell-off that we saw through the back end of last week. Again, if sellers step in here, we'd look for the retest of the weekly bull bear zone. As long as that's defended, then our ultimate objective is going to be weekly projected range resistance comes in at 69.40. So that's the ultimate objective as we trade into this week. 2 sigma resistance comes in at just above all-time highs. So any move initially, if we don't see pullbacks and we just maintain the strength, and we really start to squeeze higher, that's going to be a key area, a key test, and anticipate we can see counter trend opportunities from that zone as we head into the week. But what's more likely is we're going to see some two-sided action, I think, and at this juncture, it would really take a break of that 6,800 to the downside to suggest further weakness in the early part of the week. Looking and then for the test of this high volume low 6760s as the bull bear zone then acts as resistance. The ultimate objective to the downside will be weekly projected range support comes in 6725. Note we have a 2 sigma daily projected range support coming in 6711. So that's going to be a key support zone as referenced on the daily time frame that we just talked about. As this area is defended, we can look for a retest of the bull bear zone from below. If we can get acceptance above there, then same upside objectives are in place. So let's see how we open up here. If the gap is defended, and like I say, we really get a squeeze, take out daily projected range resistance, and that's 69.02, then 69.40 to all-time highs is going to be the first upside objective on the week. But if things start to develop in more of a two-sided fashion, given VIX expiration on Wednesday and the data-heavy slate going into the back end of the week, then we'll see how price responds to any test at the weekly bull bear zone. As always, traders, plan the trade the plan, and most importantly, manage your risk. And I wish you all happy holidays and a prosperous 2026. Thanks very much.